So Dave, it's been a long time since you and I have talked. We have a lot to catch up on. How have you been?
I'm good, and you?
Doing fine. So I just want to tell our community a little bit about you, that your background is as a professor and a chemist, and you teach at Cornell, but you also went rogue. And would you consider the markets an avocation for you, Dave, or would you consider equate it to what your career is as a teacher and a chemist? What would you say?
It's clearly a hobby for me, and since I'm relatively bearish at this point, it's not even an active hobby for me. I'm patiently waiting for something to happen that's not yet here.
Okay. Well, being a chemist, let me ask you, looking into 2018, since you and I have talked, there have been quite a few changes. The Fed has started to raise interest rates. Old school is 3 hikes and a stumble. This time it was 3 hikes and a trampoline. And we've had an election, and we have a new Fed chairman. So what elements are you looking at right now that might be combustible that you're looking for going into next year?
Well, I don't use market indicators per se. I pay most attention to valuations. So as far as I'm concerned, little maxim, overvaluation is appreciation pulled forward, undervaluation is deferred appreciation. Some will recognize that as a pirate of a thought about savings. If you're slightly overvalued, it's some ways you got to give that back, but it's a trivial thing, and it'll come back as a little frictional cost. Once you get way overvalued, then you're going to give it back also, but it's going to be a painful return. And right now, I think there's about 7 to 10 key indicators that say we're about 50%. We're about 2x overvalued. We're looking at a 50% correction to regress to the mean, and heaven only knows if we go ripping through the mean. So under those conditions, I have no interest in being exposed to this market. That's like buying a Toyota for $100,000. It's not a good idea.
Okay, well, yeah, it has been a good idea. So have you been lonely?
Yeah, very lonely. I've had to energy. I've done okay through the years. I mean, since 2000, I've compounded about 7%. So I'm not blubbering my beer, but the last 5 years have been a pain in the ass.
Okay, so does the dollar fit into your equation as far as overvaluation and central planning? And what's your best guess for when the stock market starts a correction, and if it turns into being a major one, is there going to be a flight into the dollar or out of the dollar? What's your guess?
I could imagine a flight into it first. I'm just an amateur. I could imagine a flight into the dollar first as people panic. At some point, I think the dollar itself weakens and the flight could go to, gold, Bitcoin. Who knows, right? I'm betting on gold, not Bitcoin. The thing that I'm watching the most right now is the junk bond market, in the sense that
HYG.
A variety of them, but I can't even remember the symbol for the European, corporate junk bonds are returning less than U.S. 10-year treasuries, and so that is a tulip mania to me. And
so maybe that's the big short rather than equities. A lot of people feel the debt markets are really going to be the pin that pops the equity bubble, and that is a first domino to fall. Are you in that camp?
If I don't short because I've got sucker written on my forehead. I've actually successfully shorted the market in the past in this sort of 3 to 5 year hedging mode. I shorted from 99 to 2002. I shorted from about 05 to 09 to cancel another trade, go market neutral. But to me, I'm just the fool if I try to do it. I don't have the skill. So I just go to the sidelines. When it's overvalued, it's like a card counter in poker. I size my bets accordingly. And But if I were a
Okay.
shorter, I'd short the hell out of the junk bond market. I'd probably go at some point be ready to go long volatility because someone's going to get rich there.
Oh, yeah, that's been people have been minting money, selling any of the derivative VIX products for quite some time now. So,
We're
you know,
talking, we're
go
talking,
ahead. I mean, it is a huge base. I mean, I'll pull the VIX up here, Dave, so you could see it. And here
yeah.
I believe we're looking at the daily, and it's certainly trying. Looks like if we get over 15, something's happening. Then 17. I have speed lines all the way up here at 40 and then higher. So I agree with you. And there is an expression. Look how long this base is. See, I think that's a weekly. So the longer the base, once it breaks out, and the longer the launch into space. So I agree with you on VIX. It's just very difficult to find a VIX product that doesn't have as much erosion as buying puts or calls. Have you found one? Have you found one that is not doesn't penalize you for holding them? Because I know the UVIXY and TVIX, they just keep eroding in value even with the VIX moving sideways.
The erosion issue to me is so huge that's why I would never try to find one. Again, your listeners are so skilled compared to me, so I use the activity of your listeners to tell me what's happening, but not to act upon it. And so there was, I don't even know if this is even possibly true, but someone posted a pair of 3x levered gold equity longs and shorts, two 3x levered funds, in which they both were down over 90%. While the GDX hadn't moved. And when there's products like that on the market, I stay away, right? I don't want to be part of that market. And so
okay, well, you know, I'm going to go to something that I'm more of an amateur on than you are.
Right.
And I've heard about this a few different times, and it's in your writings here. It was written quite some time ago, but it's Dave on the Fourth Turning in 2011. So 6 years have passed. Perhaps you could tell us what the fourth turning is and if it's beginning or hasn't even started yet.
Yeah. So I read the Fourth Turning not pretty much the year before that. So 2010 during 11. It's a sociology book basically by Strauss and Howe. And they basically talk about human cycle theory, and it's fairly compelling in broad brushstroke terms. They try to force it a little too much, but basically, and human cycle theory has been around since the Roman times, and it basically says there's this long wavelength cycle that's the length of a lifetime, not a surprise, and that within it there are 4 cycles, and there are various societal moods, and the fourth turning is the one where all hell breaks loose, and they say about every 80 years, you get a fourth turning. And the last one was Great Depression, World War II. The one before that was Civil War. Before that was Revolutionary War.
So kind of similar to Kondratiev?
Yes. You know, that's an analogy that's very good. Yeah.
Okay. All right. So obviously, when you look at asset prices, all hell hasn't broken loose. But you look at what's happening geopolitically, and there are plenty of pots that are simmering on the stove right now, bubbling over. So what comes first? Normally in these cycles, it's an economic downturn first before there's any kind of military action. And I look at what's happening now with either Iran or North Korea and what's happening with Mueller's investigation. Do you think it's possible, if the heat is really turned up on the president, that as a major diversion, no one's going to want to impeach a president if we're in the middle of a war? What do you think?
Well, I don't know about the details, but one of the theories of the fourth turning is that it's not that bad things happen, but it's how society responds to them. So the fourth turning is essentially a 20-year round number window where society kind of goes crazy and finally really sort of revolutionizes the status quo. And at the end of a fourth turning, there's huge change. It's kind of a new spring. And so you look at somebody's response to things and what you see across the country. And this is absolutely true. So I would say the trigger could have been the '09 crisis because everything seemed okay. I would say it got cemented in by the fact that the authorities decided to punish nobody. And so society got mad. Everybody got mad. So now
yeah, the country's very angry and polarized.
Everywhere, across campuses, on Main Street, everywhere. And then Hillary getting beat and sent half the country into apoplectic frenzy. And so the Trumpers are now energized, and the Hillary, the progressives are the most hateful group of characters I've ever seen. I mean, I've never heard so much racism and bigotry as coming out of the progressive left this year.
Okay. So when you look at what's happening with the change at the Fed, which isn't much of a change, any view there? Paul is kind of like I believe, the first non-economist to head the Fed. Any thoughts on that?
Yeah, I think they're probably.
I think he's a lawyer by trade, isn't he?
I think no matter who you pick, they're shuffling the chairs on the Titanic, to use a trite phrase. I think the Fed must have some sense of what's coming their way. I think a number of them left because they don't want to be on call when it happens. And my guess is the Fed is looking at things like this massive pension stress. And it's, the problem with the pension stress is there is no remediation. So once society is way out of whack on something so large as pensions, the corrective measure is necessarily going to hurt. I write a lot about the how underfunded pensions are and how overpromised they are, well, there are a lot of cutbacks on pensions already, Teamsters. A lot of people aren't getting the pensions that they were promised, and the pension, what is it, the guarantee fund for pensions, just is like a drop in an ocean if there is a problem. So what are they going to do? Pensions would just go away for people? That would make people a bit angrier. I don't know. So I think, for example, I've actually written a draft on this for this year. I think the federal employees have backstopping them the power of the printing press, which means we're all going to pay. State employees, there's a chance that they'll come up with some legislation to make America great again in some way and backstop them. There's a thesis out there that there's legislation moving through the system in which they're going to let pensions borrow from the Treasury to backstop them, and that's a tacit bailout because you're never going to get paid back. Right. And so it's kind of a veiled bailout, and then at some point, you've got this growing debt. It's doubled since '09, I think it is, and the sovereign debt, and any function to the nth power ends bigger than one eventually blows up. There's this trite phrase that the greatest invention is the miracles of compounding. Things don't compound like that. That's one of the biggest frauds in history. If you actually look at compounded wealth since the time of Christ, it's compounded at about 1/4%. You don't compound exponentially like that because then you swallow the known universe. And so as our sovereign debts go further and further out of control, I think currencies are going to blow up. They're just going to get devastated at some point. And I don't know when. It could be in 30 years, but it is coming. That's the art of it, isn't it, Dave? So the art is always the when. So, looking into the future is always a difficult task. None of us are Nostradamus, but I'm assuming that not much has changed, that you're still a big believer in gold, which brings me to what your thoughts are on the cryptocurrency mania. Oh, yeah, I've written a chunk on that, too. I've got a bunch of rough drafts of chapters for this year's Year in Review. I'm sympathetic to the crypto guys. I understand why anyone wants to escape the system. Right. I think that it's got all the hallmarks of a tulip mania, but I'm not willing to chime in and say it's guaranteed to be a tulip mania. There's bad symptoms. If you see a semi-log plot of Bitcoin, it's wildly upwardly curving, and so That's got tulips on it. Something like 4% by capita of the cryptocurrency owners own something like 95% of all the crypto. So it's this very lopsided ownership. So this is not a currency of the people. And so there's things about that just smell wrong. And they talk about how secure it is. Then there'll be some digital hack and wipe some wallet out or something. So there's all sorts of things wrong. I have friends, common friends with you, maybe Michael Krieger. You probably interviewed him. If not, you should. Who's up something like 100,000% because he got in early. You don't even have to size your bet right when you're up 100,000%. You can bet lunch money, Rich.
I think the owner of Interactive Brokers was on CNBC with some type of warning that once we have futures contracts, that unless people own the Bitcoins, that to allow them to be short could actually have a systemic risk for the whole financial system.
Well, so let's say one thing I think is undeniable is that the sovereigns, the central banks, the banks themselves, they hate Bitcoin, right? Bitcoin represents everything that they don't want to happen. You will occasionally
vis-a-vis Jamie Dimon.
Yeah, Jamie Dimon spouting off. By the way, while he was spouting off about Bitcoin, nobody noticed, but he slipped an earnings warning into that spew, and it never even got reported.
They're also trading it at J.P. Morgan.
I know the whole thing.
He said he would fire anyone that traded it, but probably they're one of their best profit centers now.
But here's the
go
problem.
ahead.
So let's say the sovereigns hate it. There's no chance they don't hate it. You will occasionally hear someone say, "Oh, it's an intriguing idea," blah blah blah. But it's like your parents, you say, "Hey, I want to buy a Ferrari," and they go start saving, right? They're not endorsing the idea. And so what'll happen, in my opinion, is at some point, it will become an issue. Now, Bitcoin will never be a currency until it settles down. So if you wake up in the morning and your groceries cost 20% different than when you go to bed, you're not going to use it as
that could happen just going from the milk aisle to the butcher.
Exactly.
So let me ask you this: Christine Lagarde, would you consider her part of the establishment? She said it's the new wave.
Yeah, she's the core.
Get used to it.
Yeah. So here's the deal. If I were a central banker and I wanted Bitcoin to stay off of currency status, I would just make it volatile. And then if that wasn't working, I would simply get the sovereign states to say Bitcoin is now against the law. And Bitcoiners will say, and again, I'm sympathetic to them. They will say, well, that's the beauty of Bitcoin is they don't control it. And I go, yeah, but 99% of the people will say, screw it, I'm out of here now.
Like China did?
Well,
only globally?
China's been flirting back and forth with Bitcoin. But yes, at some point they'll declare Bitcoin the currency of drug runners and hooligans worldwide, and therefore it is against the law to trade it. And 99% of the population will say, I'm not going to fight the state. Let's go back and use digital dollars and digital euros and digital yuan.
Okay,
right?
so, that brings me to what were your thoughts when Modi overnight banned certain types of denominations in India and really caused a panic since it was really a cash and carry economy. Do you think of that being the largest democracy on the planet, that it was an experiment for what other governments might be considering to go cashless? And maybe that's why they're letting this cryptocurrency experiment go on so that the public gets used to it and embraces it?
The Modi move was so inexplicable that I kind of figure maybe other bankers around the world put a gun to his head and said, you're going to take this one for the team. You're going to do this. It's going to hurt. Get over it. And so for Modi to announce that on Monday morning, the higher denominations in a country that's 90% cash based no longer are usable. It's like if Trump got on TV.
Yeah, it's turning your hundreds are no good anymore.
No, as of Monday morning, you can't use fossil fuel cars. So what happened? the entire Indian economy shut down instantly, which was predictable. Now you've got a black market in rupees because it's the only paper currency not being produced in excess now. So it's actually kind of like Bitcoin because it's now restricted. People use other stuff, but trucks pulled over the side of the road. They couldn't buy gas. Nothing. Everything stopped cold, and so it's a great illustration of how not to do it. But it might have been a symbolic shot across the bow to someone. I don't know.
Yeah, kind of a test case.
A test case, but also it had more warning to it to me. It seemed too ham-fisted to be a beta test.
Okay.
It was much more mean-spirited. So I get the feeling there must have been a subplot that we're missing.
Okay. Dave, it's always great to talk to you. I'm so glad that you hung in there and we got the audio going, and it was great catching up with you and hearing your ideas. You're not an amateur. You're an excellent thinker, and that's why I invited you on. And I wish you and yours a great holiday season, and be safe for the fourth turning, my friend.
Yes, sir.
All right. Thank you so much, Dave Cullum. And for people to follow you on Twitter, it's your name, right? At David, what's the initial?
At David B. Cullum.
Okay. I recommend you follow Dave on Twitter because if you liked what he had to say, you have any articles coming up for, who do you write for, Zero Hedge? Any articles coming up?
I do a bunch of podcasts and some interviews and stuff like that. And it's been busy this year, but I write for Peak Prosperity. I write an annual year in review that's really way too big, but it's unique in that. And then it goes from there.
Yeah, I've seen the comments on Twitter. A lot of compliments for your writings, Dave. So keep up the great work to keep people informed and thinking, so we're not all lemmings and sheep when the time comes not to be. So great talking to you, my trading warrior brother.
Yeah, thanks.
Happy holidays. So that's a wrap for us. Thank you, everybody. We'll have our TGIF session tomorrow. Norm Winsky will be with us. And remember, don't just count your pips, count your blessings. Thank you, everybody, for your support of what we're trying to do here. Our mission is to build up and edify traders every day. It's the team's hope that we're accomplishing that. So enjoy the rest of your day and see everyone to wrap up the week tomorrow. Adios.